we've seen some positive results, especially on like-for-like sales. You get a lot of reports on like-for-like. So Whirlpool is up versus what they were selling last year. So we're Indesit, Bosch, Electrolux, etc. Now that's not surprising considering last year was an exceptionally bad year for the consumer appliance manufacturers. So we're seeing positive results, but what does that actually translate to? What we're seeing on the ground right now during our research across the 46 markets we're actually researching at the moment, there are some very indifferent results. So in terms of sales for Europe, as we suggested, it would be max of 2% in terms of sell-in. What we're going to see is a lower level, because what's happening is the retailers are actually increasing stock, and that's actually a very important point. They're getting back to a level when they're actually got increasing stocks, but we're not seeing that translated into consumer sales at the moment. So there's going to be a lag, okay? And that is actually quite a key point. How long will it take for a market to actually recorrect itself? In terms of retailers and actually how they're looking at obviously getting rid of stock and obviously then increasing stock, as we've seen over 2009, 2010. The example I would give is most really Lowe's, who have about a 10% value share of electrical and appliance sales within the US. They got a period where they were obviously destocking. And they were getting rid of a lot of stock, obviously, by declining the unit price of the goods. They're looking at older stock and obviously trying to get rid of that. They were clearing a backlog. What we've now seen, and what Whirlpool have reported, obviously selling direct to Lowe's, is obviously we're getting an increase of sales to Lowe's, because obviously they're building up their inventories. That means the outlook, obviously, in terms of where they are for the North American market is more positive, and that's exactly why they're doing it, and that's their strategy. But in terms of price mix, what they'll try and do is get a broader product portfolio. So they want to make sure that obviously they're going to not get super premium products. If they're going too heavily that way, then that would obviously be an issue. Similar case for Turkey, for example. There was a new four-door refrigerator launched by Arçelik, who's obviously the key player within the Turkish market, a domestic player. They launched the four-door refrigerator, but actually the potential for that product is quite limited. Two reasons. One is because the credit card facilities can't actually deal with the price of the product, because it's actually above the 2,500 limit in terms of Turkish lira. So that's a key problem, but also the size of the product as well. There's a lot of own brand retailers within the Turkish market, but they're actually quite small in size. The square meterage of the retail outlets is not big enough to have a product like this. In terms of retailers, where they'll go, obviously the bigger retailers with the larger buying powers, obviously they're going to get good prices, and they can obviously look at a broader product portfolio. But in terms of independents and multiples and maybe smaller ones within other markets, we're going to see a different approach.